Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're talking about stocks with ex-dividends next week. So I am just about finished with my main homepage on my website. I don't think I'll be posting any, well maybe. If you guys do like these videos where I post the results of checking out 5 stocks with ex dividends next week, or some amount of stocks with ex dividends next week, and then giving sort of my opinion on it, then go ahead and let me know in the comments below. If you like the visual, if you go back and look at stocks with ex dividends next week, I always covered 5 stocks, and then I kind of put them by ex dividend date, and talked about whether they looked undervalued or overvalued, their PE, price to book, and payout ratio and such. If you did like those on my website, go ahead and let me know in the comment section below, because then I can continue it over on my website. Right now, I've been working on reformatting my homepage so that when you visit the homepage, you can check out videos on Robinhood, videos on Merrill Edge, videos on M1 Finance, videos on 401ks, Roth IRAs, and it'll all be there separate depending on the subject versus you having to either click on different pages and look for those. So in today's video, we're going to be talking about stocks with ex dividends next week. We're going to be looking for stocks first, and then we're going to be screening, say, 40 stocks, all those that are between a range of 5 and 3.4. Those are going to be some of the best stocks we're going to be screening for. Those are going to have stocks with continued dividend increases, continued dividend payouts. Over the next 4 quarters, they're expected to be profitable. They're strong contenders. Some of them of which have been paying out dividends for more than 10 years. We're going to be screening those stocks for PEs under 25, which is the S&P 500 average, right around there, 23, 25. Yields over 2%, and increasing revenue, increasing net income. And then if we can get some of those stocks to have been paying out dividends for more than 10 years, meaning that they did pay out during the last recession, then those are some of the stocks we're going to be finding today. So of course, if you are brand new to my channel, I do make stock market, investment, financial videos weekly. So do consider subscribing for future financial videos. I highly appreciate it. And of course, if you do like the video, hit the like button below. So let's go ahead and dive into it. So right off the bat, we're going to be using dividend.com. I made a video on how you can use this website to find stock ex dividend date. You can use it to find how much they pay out, what percentage that they pay out, what's their schedule, their dividend increases. We covered how how the ex dividend dates work, how the dividend gets removed from the stock. That's all in a video. I'll have that in the top right corner. You guys can click on it and learn how all of that is done with an example using AT&T. So all we're going to do here is click on ex dividend dates. We are looking for common shares between March 5th through March 9th. So man, we're on the very last day of February tomorrow, Wednesday. So we're going to be coming up with our 1 month portfolio review for February. I think I'm going to be releasing it over, still considering, I don't know if I'll be putting it out specifically on this website or if over on Patreon and such, more of a private kind of going forward, but we'll kind of discuss that here going forward. So March 5th through March 9th, common shares, search. Next, we're going to be sorting them by the DARS rating. Again, this is the strength of the stock, how long they've been paying out dividends, their dividend increases, the expected 4 quarters in the future, and sort of history of the stock itself. So we have 3 of them with a rating over 3.8. It's very rare you see any stock with a 3.9 or higher, or yeah, it's very rare. So what we're going to be doing is we're going to be pulling in all the stocks here that have a rating of 3.9 through 3.4. So our 3 top ones are Avery Dennison, Walmart stores, and Omnicom Group. And the last one that we're going to be including here is Carter's, so clothing retail store. So let's go ahead, and all we're going to be doing is using Y charts to screen these stocks. This will give us a very visual, very quick screen of the stocks. And then if they do pass our initial screening, we can then do a deeper dive, which we don't cover in this video. But for the most part, I like to look at a stock visually first to take a look at its PE, take a look at its yield, its future PE ratio, its revenue, free cash flow, net income over the last 5-10 years, price over yield, the dividend payout, dividend history. So we're going to be taking a look at that and then using that as sort of like a visual screening process. So let's go ahead and get started. I did make a video on how to access Y charts for free. It's over on my website. On the financial-investor.com. I'll actually have a link in the top right corner. You guys can click on that video and check out how you guys can access it, and you'll have all of my financial metrics that I use in these videos for yourself, so you guys can screen for your own dividend stocks, either in any specific month that you're looking for or a specific stock that you're looking for in a sector. That you can do specific sectors, so you can do a screener and then screen by specific sectors. So if you're looking for a financial stock, so they have it all here. So let's go ahead and punch in the security ticker symbols. So AVY. So what I'm going to do here is pause the video, because this process has to be all entered by hand. And instead of kind of rambling through and talking about, random stuff as I'm doing this, I'm going to go ahead and pause the video in just a second right now. Okay, and we're back. So we have a wide variety of stocks here. Kind of taking a look from the top, we have Walmart, retail, we have Kraft Heinz, waste management, we have some retail real estate investment trusts, some BlackRock. I believe that's, real estate investment trust. We have some healthcare. Let's see here, Home Depot, Cinemac Holdings. I heard some good news on that just over the last, the videos that just came out. Black Panther came out. They did very good on that. Kimberly-Clark, CME Group, financial sector, Lithium Motors. That's an automotive, one of the largest automotive across different states, like 39, 40 different states. We have Dunkin' Brands, FedEx, Carter's. So those are some of the ones that we included in here. Some of the ones that didn't make the list right off the bat that were high contenders was Praxair, and it's primarily all that I recognize. So that is basically it. That's all we're going to be using Ex-Dividend.com for. So we've actually put in all of our stocks here. You can see we have a huge list right here on the left hand side. Let me go ahead and zoom it in and actually cut off the list there. But all we're going to be doing now, so our initial screening, our screener that we're going to be doing here, let me go ahead and we'll actually leave a few of those. We're going to be screening it first for PE ratio. So what we're going to be looking for is a PE ratio less than 25. Now the screener only allows you to have around 10 different stocks at a time. So I'm going to go ahead and remove some of these until these PE ratios pop up on the screen. Now there we go. We have quite a few PE ratios. One of them is 171, whereas the lowest is 14. So Beckon is by the color. We're going to go ahead and remove that one. It's going to remove that 171. We're going to go ahead and remove automotive ADP. ADP was one that was in my portfolio. Great growth. It shot up, but it was at a PE ratio less than 25 when I initially purchased it. I believe it was right around an 18 when I had screened it. High yield over price. Now it's trading at a PE over 30. So let's see here. We have the green one, Home Depot. Home Depot was another one that was very low, shot up very high. So there we go. These stocks right here from United Fire. I'm going to go ahead and select all these up top. And then UMB is the one that I stopped at. So these ones, I'm going to go ahead and remove the iShares. Just ETF there. So here we go. We have Agilent, which is the 116. So we're going to go ahead and remove Agilent here. And we're left with the Every here, which is 38. Waste Management's at a 28. We have a Walmart with another 20. That's a pretty high roller. 27 is Nielsen Holdings. I'm not sure if that's the company that gives you the box to see what you're doing online and such. But so UMB was the one that we had left off prior. Let's go ahead and continue on from there, selecting a few. So we have VF, which is over 25. We have Occidental, not sure how, Occidental, and that is it for there. We have, whoops, let's go ahead. I believe that was the last one. Yeah, that's over 25. So we have Williams. Let's go ahead and have the remainders in here thrown in there now. So all we're doing is removing the stocks right now that have a higher PE ratio than the S&P 500 average. So analog is going to remove because it has a higher PE than 25. And of course, you guys can remove, if you guys would like to go even down to 20, then you guys can do the same. So right now all I'm doing is removing anything with a higher PE ratio here than 25. So now we're left with stocks here that have a higher PE or have a lower PE than 25. So all these stocks are trading below the S&P 500 average. Next, I'm going to go look for a yield of under 2% and remove them. So anything with a yield under 2, such as FedEx right now, trading at a 0.76, where it might be a growth company. The PE ratio is a bit low for a dividend investor. Here, Carter's trading at a 1.27. Purple, which is Magna, I believe that's the one. I'm going to go ahead and just uncheck it. Yes, that did remove it, so I'm going to go ahead and remove it from my list. And that leaves everything else with a yield of 2 or higher. So we're starting off at Lowell's, and we're going to go ahead and add about 10 of these in here and go through the process again. So Lowell's has a yield of 0.5. We have United Healthcare with a yield of 1.24. UMB, which is 1.4. CME 1.5. Engelroll, I believe IR, I think that's another paper company. And there we go. Everything below a 2 removed. Let's go ahead and add the remainder in here. And let's go ahead and knock these out. So we have Lear dividend yield. Where's that? Lear. And Forward Air. So the whole process, the whole reason for looking for Ex-Dividends for next week is primarily because I don't, unless you're following, all you're going to get fed through the headlines is these stocks that are Amazon, Netflix, Google, all these main stocks that are just on the headlines all the time. You're not going to see a lot of these stocks that aren't going to be, these aren't going to be very publicized stocks. So here, now we have thinned down our list. So many of these stocks you may not even recognize. Kraft Heinz, United Fire Group, Cinemark Holdings, Kimberly-Clark. Kimberly-Clark is one of those, they've been paying out dividends for 33 years, I believe. But some of these other ones, I don't have any idea on the history of the stock or even what they do. So doing this whole screening process allows me to kind of get in it, get some more, gives me a better representation of the market as a whole, so I can kind of see what's out there, what are some good deals. So so right now what we've done is we've screened it for a PE less than 25, we've screened it for a yield over 2, so that thinned down our list from around 40 to around 15 stocks. It looks like maybe 10 to 15 stocks here. Now I'm going to go ahead and punch in my revenue and my free cash flow and my net income. I'm going to go ahead and switch it to percent change, and I'm going to look at over the last 10 years what has the growth been, and I can include the price here to kind of see what the price has done with the stock in comparison. So right now we have positive revenue, positive net income, positive free cash flow over the last 10 years. The stock has risen up 175%. I'm going to go ahead and leave that in there because it looks like a good stock. But I'm going to go ahead and continue screening to remove some of these. So net income on Kraft Heinz is up 1.63 thousand%, whereas its revenue is up 18%, its price is down 14% over the last 10 years, and its free cash flow is down 211%. So the net income, the revenue looks very nice. The price is actually very discounted right now. The free cash flow is down 211%, but they may have done some acquisitions. This is a good time, prosperity. They could have used some of that free cash flow to buy some of the smaller companies out there because they may have had. Let's take a look at what their free cash flow is like. Let's go ahead and remove the percentages. We can see that their free cash flow is down in the negative 690 million. So I would definitely want to look at the 10Ks to see where the heck their money is going. But overall, their revenue is up, their net income here is up in the billions. Their revenue is up in the billions. So their net income revenue is becoming positive, whereas their price has dropped. So this is one I'm going to go ahead and leave it for now, because this one deserves to be investigated further to see where its free cash flow has been going over the last 5 years, to see where that money has been going, what's been going on with it, because net income and revenue is positive, the price is down. This could be a great buying, underpriced stock to buy and hold until people see that it's underpriced. So let's go ahead and flip it back to percentages. So again, looking for net income, which is the green, and orange, positive. Free cash flow, that can be in the negative. So here we have a very steady, okay, I have a phone call, 1 second. Okay, I am back. Free cash flow is down, whereas net income, revenue, and the price are all at the same percentage. So this stock looks pretty nice right now. I'm going to go ahead and leave it. Again, when free cash flow was down, I like to research by going back through the 10Ks to see where that cash went out. But I do like to see rising net income and revenue, and a steady increase in price is nice. So here, all positive. I'm going to go ahead and just continue on. Here we have free cash flow down 206%. Their revenue is down 28%, but their price is up. Their net income is up. It looks like their net income spiked down for a while, and then they kind of turn around. I'm gonna go ahead and remove this one. I don't want to have too many stocks to kind of thin out even further here. So we're going to the Cinemark Holdings. Over the last 10 years, even during the last recession here, you can see this price back in 2008 period. It was nice steady increase even during the recessions. Had a huge spike in 2015 before falling, bottomed out at 2016 January, and has continued on, pretty steady up, 145% up over the last 10 years. Their net income is up 80%. Their revenue up 39%. So net income over revenue, that's nice. Their free cash flow is holding strong. It's positive. So these could be acquisitions right here. These it's kind of like dividends. When you see dividends, when you see spikes in dividends, that's because they had a special payout. When you see spikes in these free cash flow, these are acquisitions. They probably bought some properties, and that's what those are. I assume so. So again, take a look at 10Ks here, but I'm gonna go ahead and leave it and continue on. This one, price has shot up huge. Their net income is down, and it's not moving so hot. As far as net income, it's pretty, over the last 10 years, they're barely up 20%. So that's 2% increase per year. I'm going to go ahead and remove this one. Actually, I'm going to leave it and then kind of thin it out at the very end. Kimberly-Clark, free cash flow is up. The only thing that's down here is revenue, but their net income is positive. I'm going to go ahead and leave that in there as well. Boy, this is getting really hard to thin out when there's not a lot of negatives. So revenue down, has been steady in the decline. They semi-picked it up, but they're still in the negative here. Whereas their net income is positive. So net income is the important one here, up 191%. Their revenue may be decreasing, but they might be increasing their prices in order to, I'm not even sure what this company does, Brinker International. So again, I'm going to leave it there for now. I'm really looking for some ones that are negative to really remove, but there we go. So this one, up in the price 94%, but their revenue is down, their free cash flow is down, their net income is down over the last 10 years. Going to go ahead and remove that. Williams Companies, we're going to go ahead and see net income up. The price has been pretty steady, only up 90% over the last 10 years. That's an increase of 9% every single year, averaging. Their free cash flow fell down pretty hard between 2012 2015, but then recently picked back up, and then looks like it's on its downwards trend again. It's, what's the red one here? Free cash flow. Free cash flow comes and goes. That's fine. Let's see here. Revenue. I'm going to go ahead and leave that one as well, because the only thing that's red is free cash flow, which that just needs to be investigated as to why, where their money is going, and that's all reported on the 10K. So again, red, free cash flow is down. So I'm going to go ahead and leave that one. I don't like utilities right now just due to the rise in interest rates. All positive. This is going to be a really tough week here. So lots of good stocks. This one, net income huge over the last 10 years. This has a 91% average net increase. Year over year. If you took 900 divided by 10, that would be a 90% increase every single year. Dunkin' Donuts, their price on the stock is up 12% average every year. Net income up positive. Their free cash flow up positive. Good looking stock there. Scana, ticker symbol SCG. What else could we use to really thin down our list? I mean, we have some great looking stocks here, so it's not to knock any one stock out. If we wanted to, I guess we could thin it down by how many of these have been paying out dividends for more than 10 years. So right now, the high contenders, but this one is not wanting to load here. And I'm going to go ahead and give it 5 seconds. If it doesn't populate, I'm going to go ahead and just remove it for being slow. This could be a great company. I have no idea, but it's not populating, so it's gone. Okay, next thing, just to kind of thin down our list even more, I'm going to go look for stocks that have been paying out dividends, nice steady dividends over the last 10 years. So this one has been paying out dividends for more than 10 years, but between 2008 and 2010, they did not have any dividend increases. 2014, they increased their dividend. Didn't continue, there wasn't a dividend increase. Usually they increase it here in the middle of the year. Here they increase at the beginning, so that's actually fine. Up 300% over the last 10 years. That's good dividend growth. Kraft Heinz, very slow dividend growth. Looks like they increase their dividend every 2 years. It looks like sometimes, beginning of 2016 they increased it. Did not increase it till the end of mid 2017. Kraft Heinz, they combined. This is fairly new. Doesn't have a 10-year relationship. You can see here this only goes back to 2015 time frame. So I'm going to go ahead and remove Kraft Heinz. BBT, decreasing dividend, go ahead and remove that one. UFCS, during the recession they froze their dividend yield. They may have decreased it if we look at the max. So yeah, 2008 they froze their dividend yield. They froze their dividend. Okay, let's just go back to the original format, and we can see how much they paid out. So they were paying out roughly over the a 10-year mark. They locked it right around 14 cents, right around 8 to 10 cents. They locked their dividend and continued to pay out that dividend through the 2008 recession. After they increased their dividend pretty nice and steady, we can see over the last 5 years, what's their percentage up? They've increased it by almost nearly 90%. So they've almost doubled their dividend over the last 5 years. If you had bought into the stock and held it for nearly 5 years, 5 or 10 years, your initial dividend payout would have doubled because they increased their dividend payout by nearly 100% so far. So that looks pretty positive right now. I'm going to go ahead and leave that one in there as a contender. Cinemark Holdings, this one been paying out dividends. You can see it's not consistent increases. Do they have any cuts? So it looks like they started paying dividends during the recession and did not, they had one increase when they initially started paying out dividends, and then increased it in 2010. Didn't increase it until 2013. So every 2 years back in this recession period, they increased their dividend, and then pretty recently they started increasing it more often. TRV decreased their dividend during the recession period. I'm going to go ahead and remove that one. They could have done a dividend split, but I'm going to go ahead and thin these down. Kimberly-Clark, been increasing dividends for more than 33 years. EAT, Binker International have been paying out dividends. Looks like more than 10 years. They did lock their dividend between 2008 2010. Genuine Parts, nice steady increase. Looks like a long history of paying out dividends. This one had cut their dividend in 2002, 2003. Cut their dividend again in 2008. Not very, buy and hold. If you're buying and holding for that dividend payout, you don't want companies that are going to cut their dividends during times of recessions. You want them to continue paying out their dividends. So here we are, nice steady. So now we've thinned down our list a little bit more. And now let's look at price over yield over the last year and see which one of these stocks are currently looking like they're undervalued. So Omnicom Group over the last year, you're currently buying. If you were to take a look at Omnicom Group, its yield is over the price right now. It has had a bit of a downturn here recently, so this is something I would investigate. Why did their price, of course, it's been pretty rough in January. I'm not sure if that's a utility company. Let's go ahead and just see. We've thinned our list down pretty far. Let's go ahead and thin it down to 5, and then we'll look into those 5. So I don't want to cut out ones that have price over yield. So we have 2 price over yield, we have 3 price over yield, 4 price over yield, 5 price over yield. So I'm going to go ahead and thin out the ones that have a price on top of the yield. Okay, my kiddo had to give me some chips, so he just got home, brought some chips home. Okay, price over yield, going ahead and remove it. Kimberly-Clark is yield over price. EAT, yield over price. GPC, yield over price. And Dunkin' Donuts, yield over price. So here we are. We have 5 stocks with ex-dividends next week that have PEs less than 25, increasing revenue, increasing net income, PE ratios under 25, yields over 2. So let's take a look at what these stocks are. So first of all, OMC. Second is Kimberly-Clark, KMB. Control F, KMB. Number 3 is EAT. Number 4 is GPC. Number 5 is Dunkin' Donuts. So here we are. Let's take a look at these now using dividend.com. So ticker symbol OMC. Omnicom Group is an advertising agency. They've been paying out dividends consistently, increasing dividends for the last 8 years. Payout ratio under 42%. Their dividend date is, ex-dividend date is March 8th, and then you would get paid out on the 9th of April. Good history there. They have 8 years of dividend increases. Kimberly-Clark, 45 years of dividend increases. Payout ratio under 60%, looking good. Dividend yield 3.56. For every $100 you have invested in Kimberly-Clark, you would make $356 in dividends. Omnicom Group, you would make $3.12 for every $100 you have invested. So you can buy 1 share with your $100, or you can buy partial shares over at M1 Finance. I talked about that. Let's see here. EAT, 7 years of increasing dividends. Payout ratio under 60%. This is a restaurant, so could be good, could be bad. Really have to look into what restaurants they are. I'm not sure which ones. I think Yum or Taco Bell. I'm not sure what EAT is. Genuine Parts. We have auto parts, wholesale parts. People are always going to be buying parts regardless of a recession or not. People have to transport stuff. People have to continue doing their business, and that takes vehicles. So auto parts wholesale, they've been paying out increase in dividends for more than 61 years. Payout ratio under 60%. For every $100 you have invested in this company, you would get $3.11. Their ex-dividend date is on March 8th. So March 8th is next Thursday, and then you'll get paid out on April 2nd. So good luck in stock there. And then we have Dunkin' Brands, which is another restaurant. Yield again under 60%. Dividend growth for the last 5 years. For every $100 you have invested in them, you would get $2.27 in dividend payout. Again, their ex-dividend is Friday, so you do need to buy the stock on Thursday or prior. So those are our stocks for today. Listed in terms of dividend increases, we have GPC, which is Genuine Parts, Auto Parts Wholesale, dividends for more than 60 years. Kimberly-Clark, dividends for 45 years, payout ratio under 60%. OMC, 8 years of continued dividend increases, again, payout ratio under 60. Brinker International, this is a restaurant brand, increase in dividends for 7 years, payout ratio under 60. For every $100 you have invested here, you're getting $4.44 back in dividends. And of course, we've already screened these. They all have PEs under 25, yields over 2, and increasing revenue, increasing net income. So all you have to do is take a look over the last 5-10 years of 10Ks and see where their free cash flow has been going. And if these are at all interesting to you, I kind of, let's see here. Dunkin' Brands, 5 years of dividend increases, yields or a payout ratio under 60%. Dividend yields the lowest of the bunch. So again, Genuine Parts looks like one of the strong contenders right now. If we go back to Genuine Parts here, just take a look at this dividend history here. You can see the 63 years of continued dividend increase. Their price right now in comparison to their yield over the last 3 years. Over the last year, they came down due to this correction, but this is a very nice healthy swing that could be building a little teacup. So you'd be buying it almost nearly at a 3% yield. It looks like the history of the stock looks like there were times when you could have got it at a 3.2. So this one could come down a little bit further, down into the $84 range, but over the last recession period here, it did fall but recovered. Let's see here, 2009 it fell, 2008, 2009 it did fall, recovered a little after 2010, so very quick recovery period. And then of course we have Kimberly-Clark over the last 10 years, recovered it again, and 2 years or less. OMC, I have too many clicked here, so let's remove Kimberly-Clark. OMC, they didn't recover till around 2011, so about a 3-year period there. Eat, they had about a 3-year recovery period as well from the last recession. And Dunkin', they probably were not trading back in 2008. You can see, looks like they became public maybe in 2011, or they IPO'd right around there. So that is it for this video. Again, we have ticker symbols OMC, which is an advertising company. Kimberly-Clark, known for their tissues. We have Eat, which is a restaurant company. GPC, which is automotive wholesale parts, and Dunkin' Donuts, and of course, another restaurant brand. So there you guys go. 5 stocks with Ex-Dividend next week. Screening very visually. I'm sorry if this was a little bit rushed. I do like going over it on my website because this has already been done, but you can see the whole process of how I very quickly, 30 minutes or less, I took 40 stocks, ran them through Y charts, screened them for PEs less than 25, yields over 2, increasing revenue, increasing net income, little gaps in free cash flow over the last 10 years. We could screen their price, their dividend, their yield, and we come up with 5 stocks to investigate that could be potential buys. So that is it for this video. If you have enjoyed the video, remember to like, comment, and subscribe if you're brand new to my channel. I do make all sorts of financial videos, so I highly appreciate it. If you have any questions about anything that was covered, or you own any of these stocks and you're long term, go ahead and let me know. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, looking for some great deals out there, right? So that is it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.